S&P 500 finally got back over the 55, so now we're back over the 55, the 22, and the 12. We're going to talk about why we got there and how we got there. Obviously, retail sales we need to address. I think there's a couple key things we need to look at in regards to the NASDAQ too. We're going to get to this 50% level, but we got right to the top of this doji from August 1st, or actually shouldn't really call it that part of the doji. That's more your reversal piercing pattern, that bearish piercing pattern right there. We're going to mark off this 50% line and show you why that's so significant and how it flipped. Let's get into that right now, why we're here, because we have a lot to cover, and that way we'll just stay on point. Let's just drill right into this right now. I do want to spend some time on some of these big moves that happened after hours as well, especially what happened with AMAT, what's happening with H&R Block after hours. That was a really good report. We should go through that. Some of these massive moves today, which ones you should be focused on, which ones are probably high flyers. We measured the move from July 11th down to here. Now, this July 11th, as you guys will remember, this was the move with what? What happened here? CPI month over month came out at what? Negative 0.1. That negative 0.1 was the worst reading since when? The pandemic. Everybody panicked and everybody got out, and that marked the high on the NASDAQ. You'll remember what happened here where RSP lifted ahead of this. We can go over that again right now for those that don't remember, but RSP, we'll drop that to a 1 minute, change that to a line, and we'll show you the flip and why this flip was so significant. Drop that to a 15, and let's get rid of the pre and the post real quick, and then we'll come back to the NQ. But you will remember here's July, and you can start seeing the flip as we get closer, 10, 11, and then here you are. This is when we flipped, and we know that RSP is the equal weight versus market weight. So if we drop the zero line from that point, and we just zoom out, you can see what has transpired. Let's go back to that so that you can see that in real time. Okay, so what has transpired? You're lifting, and this is making the higher high. You're getting ready to get back to where you once were. Now, let me just show you that exactly where you are. Here's the 10th. So what we're going to do is move that to right here. And that's going to get you to July 11th, and then I'm going to drop that right there. So you're still, from that level over, you can see what happened with RSP versus the SPY. But the SPY is starting to participate again. But you will note that while RSP lifted and was hitting higher highs in here, you were seeing us drop off because they were diversifying into what? More of the dividend ending, more of the XLF, XLE, XLB names, anywhere they could find low beta names they were buying. And then you can see the lower low or the lower high, lower high, lower high, and then you can see the higher high here. And obviously that's what you call divergence. See from this point on, from the 5th on, what are you doing? You're rocking and rolling in tandem, and you are starting to see more cohesiveness, which is exactly what you want because that shows a broadening out of the market. This is very healthy. This is way more healthy than what we were having going on up here. And this means that you're going to start probably seeing that what was leading before lead again. But let's get back to the NQ so we can remember why that date was so important. And we'll just drop this back to here, get rid of that line, go here, make that an hourly, and get back to it. So here's that date. You remember what happened and how the world changed. This is Japan. And this is when Japan said, we're raising rates, we're mad, and we're not going to take it anymore, and we're raising rates. Inflation. This is why I'm always on you guys about macro, fundamentals, and what else? Technicals, right? And there are the three things that you should always be focused on. And then after you have those three things, you come across, and this is your trading platform up here. This tells you what? The macro. This tells you who is affected by the what, and this tells you when you should pull the trigger, the technicals, right? Without one, you don't really have a stool to sit on. If you have two, you're still going to fall over. This is why investment banks are set up this way. I would suggest that you start looking at it the same way. If you ever look at these guys that always show you when they're making money on zero-dated options, you'll always note that they're doing it around CPI, PPI, retail sales, something like that. I think maybe they don't know that that's what they're doing, but I doubt that. And I think that they should be a little more honest about the fact that they're doing it around the macro event. Anyway, if you can see these levels in here and how we're acting now, 50% line, 50%. Why do we use 50% even though it's a fib? Because it tells you who's in charge. So in other words, when you're battling in this area and you break down and you measure, you know, are buyers in charge or are sellers in charge? And when it flips, look at the way that it moves from that level. And this is a really important concept to get, guys. When you broke and the sellers were in charge, look how fast you dropped, right? We always say it. You take the stairs up and you take the window down. And then you take the stairs back up And look at this battle that you had here and how long this battle went on. And you can see us bouncing around in here. And then what got us over was retail sales, which we're about to go over in a second here. So you have retail sales, and look at where you started to slow, right where we had the US dollar yen issue. So for us, what does this mean? You need to watch this level tomorrow, and this level now has not been tested. And I'd like to see it tested before Jackson Hole. We'll get into that on Saturday. Make sure you watch Saturday's video. I already have it all mapped out. It's packed. We have to go through smart money, dumb money in great detail. But structurally, what we're seeing is pretty sound. Now, if we clean all this off and we flip back to this on a daily, and we start with the simplest of charts, and we just realize that we're back over that 55 on the futures market, drop this in on the Qs, clean off the lines, and you are back over there. And is that from the 5th? No, it's actually from much, much further. So right from here is when we broke on the 24th of July, and you have not been over on the Qs to today. So why are these lines so important? I'll walk you through how I use them. This is a 12, this is a 22, and this is a 55, and I'm talking fast because this video is packed, and we have a lot to cover in a short time to do it. So here we are at the 12 pointing up. The 12 tells me, do I want to do a swing trade, yes or no? Below, to me, probably not. Above, yes. I also use the 5. There's another setup I'll use as well for this, but this is the main one. 22 tells me who's in charge, bulls or bears. Underneath of that, the bears are in charge. That's how I view the world. Above it, the bulls are in charge. What you will note by that is you'll say, why do I have so many failed breakouts when you're below the 22? And then how many failed breakouts did you have today? Not a lot. Bulls, bears. 55, institutional support. Why is there no follow-through? Because institutions are not playing the game here. Now, this was a little different because obviously, and we're going to talk about that in some detail on Saturday, but what you can see here is by using these demarcation lines, they kept me out of trouble. When I break here like this, I stay out of the way. Matter of fact, I have an entire setup that I use that keeps me out of that way. But you see these gaps and you see this pressure to get back in. That's important, but you still don't have above average volume. So we have to go through the sectors. We have to look at where that volume is going. And then I would always look at this. And this is something that I pay very, very close attention to. So this is the Qs divided by the SPY. And what I want to do is just pay attention to this and just go. If I just drop that 55 in, the SPY is still outperforming the Qs. I'm still not over that 55. So I need to be, as we would use the word worry, but overall, this was really, really good. So what the heck happened today? What drove us? Well, there are several factors today, and we'll get into it. It was actually a perfect storm. So retail sales right here came out month over month, and you came in at 1%. Previous, you were negative, which made us think that the consumer was weak, showed signs of a recession, okay? And our consensus was 0.3. So we crushed it, knocked it out of the park. Then on top of that, claims. We were looking for the forecast of 239 by this corporation, which is Trading Economics, but the consensus was 235. The previous was 234. We were concerned that we were going up. We're not going up. We're actually going down to flat, we'll call it. This is kind of mixed, but Empire State came in negative, but less than negative. This came supposed to be positive, but came in negative. Is that an issue? Yes and no. The real issue is just retail sales. The previous year over year was 2%, and now we're at 2.7. And I think that that's really important for us to get. But what really saved us was the retail sales. And then on top of that, it was the investments. Besides the earnings that came out today, it was the investments that some people made that really gave solidified the move. Here, let me show you. It started with Walmart this morning, but it actually started before then. But Walmart was the driving force, and Walmart beat, and their margins were better than expected. We actually showed them, as we refer to in the industry, as they are sandbagging, meaning they're doing much better than they're showing, and what that means is that they're probably going to have another really good quarter because margins were higher than expected. Margins are a key driver. We're going to talk about AMAT and margins tonight as well, but based upon this, we can see that, just open and then you sold down, but that's a huge move, and after you go through something like this, people are going to take profits. Now, while that came out with earnings, Nike is back above the 55 SMA today, and I think that's really important. Now, William Ackman is an activist investor, has been around and buys companies for years. Everyone's familiar with what he did with Chipotle and how he turned that company around, but it took him years to do it. What you're seeing in here, and I think it's pretty significant, is you're seeing a lot of buying that got back to that institutional level, all because he came into the company. Nothing else changed today, but look at the above average volume because of that. The other week or 2 weeks ago, I started a Starbucks position, and then it just didn't do very well because of earnings, but it became clear that we had a buyer in there, and that buyer was Elliott. Comes in, earnings were okay, not great. We wound up getting out of the trade, making a little bit, but no, actually we wound up buying and losing a little bit of money. And now I'm back in the trade. I'm doing quite well with it. But what's interesting about this is they got the CEO from Chipotle. So what's going on here? Why is this important? And now they're blowing it off. And I think that shouldn't have been here, but should it be here? Is it not that big of a deal? I think it's a pretty big deal when your CEO leaves to go to another company. It's not like he retired. He went to another company. So obviously he's being paid more and sees more opportunity there. Something to think about when CEOs do this. So this is setting up nicely. But what are we seeing? We're seeing a trend. Bill Ackman takes a position in Nike. Walmart knocks the cover off the ball. All right, literally knocks the cover off the ball. And we go and take a look at this. The other thing that we have going on right now is people are looking at these names a little bit, but LVMHF, take a look at this. You see that little move right here? I know it doesn't look like much, but when you drop this on a daily, you can see the move on Louis Vuitton from the bottom to up, and you're up about 50 points. You can see it with Hermes as well. Okay, you see that bounce back over the 55, and then of course you would have this level right here. And to me, this is exactly what you're looking for something like Hermes to just continue to push it and go higher. Now, that said, the other name that I like playing with a lot is Ferrari, and this is breaking out to all-time highs. CPI in France came in weaker than expected, shows that they're going to do something for the consumer. The consumer is still strong over there. These names benefit. Now let's bring it home. Warren Buffett, who everybody watches as a value investor, he goes out there and takes a massive position in Arete. He does not put his toe in the water. He looks something up and then he invests for years. He took a position in here. We got right to the 55 and we held. So what we're seeing on everything that we just went through is we're hearing the consumer is dead, but we're watching activist investors from Elliott Management to William Ackman to Warren Buffett get involved in these companies. They're not getting involved because they're going down. They're getting involved because they're going to go up. Does that mean they're going up tomorrow? No. But I think you have to look at this with like the XRT, which is the retail space. And you can see the island right here, and you flipped back above what? The 55. Take a look at consumer discretionary, and where are you? Back above the 55. Okay, this is significant, and I find this move very significant, and it just kind of went all the way through the field from looking at something like Carnival Cruise. Now, there are names out there that are still beaten down, like ELF. I would be looking at the ones that institutions have already done the work on and taken advantage of. I mean, if you go back and look at some of these names and you have years and you bought Apple, for example, when Buffett bought Apple, you did okay. If you have that type of outlook and you're buying Arete when he's buying Arete, you probably did okay. Does everything he do work? No, not at all. He bought Taiwan Semi, and then what? He blew it out when he was break even before it just moved and would have doubled on him. But he got out of the way and probably did it for geopolitical reasons because he knows way more than we do, and maybe there was some concern. But he got out of the way, I think in the 80s, somewhere back here before it doubled. But that doesn't mean that you don't want to take a look at some of these things that these guys are doing. It starts to make sense to watch where these guys, again, this boils down to you don't have a research department. You don't have access to Goldman and knowing what's going on with the debt structures of these companies. These guys do. They are plugged in. So that becomes your fundamental analysis department, watching what these guys are doing, the big dogs. Why would they play these names? They could play any of them. So what we have here with something like an Arete is you have a macro driver, which you've just seen on retail sales. You have a fundamental driver of the company. Obviously, they expect the company to do better or Buffett's not buying it. And then maybe your technical is something like above the 55, whatever you use, right? And then you just put your trade on and it either works or it doesn't. But I would not be sleeping on the retail names for those people that are longer investors. Your comments are always asking, what am I looking at long term? I would start looking at these retail names that these guys are putting money to work in. They're not putting money to work in there because they expect them to go a lot lower. They expect them to be near a trough valuation, and that's why they're putting money to work. Speaking of that, let's talk about the stocks and what happened. You're 12, 22, and let's talk about this. Now, I had an SOXL trade, and one of the things that I think people do wrong, I got involved yesterday, and I'm out already. And I did it for a trade overnight. That was it. That's why I wanted to do it. I think a lot of people are holding these things in the hopes and that they're going to catch this kind of stuff. You know, when you put your trades on, if I could just give you any advice, once they execute, they execute. It doesn't mean that you can't get more information and change your opinion. You absolutely 100% can. You know, a great example of this, we traded this today. ASTS, we actually traded it overnight as well. But these guys have been in the room, in the community. They've actually been trading it since back here, like $3-4. I was mocking them back here, candidly. But they've been trading, they've been doing exceptionally well with it. I've had a couple long trades, I've done well, but I had a really great day trading it today. Obviously, I mean, anybody could have. But we came in long the name, and then we had some calls. I'll walk you through this live in a second. But when I doubled in the calls and then it started showing signs of weakness, I got out of the trade. But that doesn't keep me out of the trade. So as I see signs of it, what I do is I will look and see if I'm wrong. And if I'm wrong, I will find a way back into the trade. So something like this, when it starts pushing and you start seeing wicks in here, and I'll show you in a moment, we paid like $1, $1.50 for the 22s. When they got up in the 3s and the 4s, I'm pulling money out of them left and right because I'm seeing signs of exhaustion. But what that does is it also presents me an opportunity, because when I reverse, like it does, you can see the springboard and go from there. Now, what this also did was present another opportunity that I'll show you in a second. But let me show you how we handled this, got back in the trade, and then I'll show you the other trade after this, because there's a lot of lessons in here specifically about if you have a process, follow it. It doesn't mean that you can't do another trade. And I think this is where people screw up. And I want to do a whole price action video on this. So watch this live, and then I'll show you another one. And let me know if this is helpful, because I do think showing how to do reentry properly is a really great idea. But let me know in the comments. Base phones, $3 on those calls. I don't even want to sell anymore, but I'm close to a double now. So pull something out. Down to about 50%, it looks like, on those calls now. Space phones for the win. This is why you got to pull money out of ASTS on the way up. And because eventually you're going to get that to a third. Where I saw that rest, 339. That doesn't make me happy. See this dump, and it's at the high? That's an area you want to watch. Popped at 26. And someone just dumped $500,000 right into that. Sold everything but 20% down to a runner, which will be now a break. You're getting a doji here on space phones. Just watch it. ASTS just flipped again. That 5 just flipped to green. That red bar now is a doji. So if you flip the doji, you're going. Yep, there it goes. Not willing to go for the space phone ride with those calls, but I think I might regret that. Might have to start trading stock, because if you push there, you're probably going to go. I can just even use that low and see if it forms or not. I got 2 minutes. Let's see what happens. ASTS, I'm up in that now. Killing it in this ASTS. Never seen a company miss earnings so badly and do so well. I'm going to trim into that little move right there. See, that's why you got to pull something out of these when they're up here, though, so that you can deal with this nonsense when it happens. It can still work, guys. It could just reverse right back on me, but I'm just not playing games with it. Now, I hope that was helpful. And I really like to do a video on this, on how you do the re-entries, but you can see the one right here pretty clearly, and then how you flip and these dojis. What I always do with these kinds of names, which I view as highly speculative names, I mean, let's call it what it is, guys. This is highly speculative in the way it's moving, and we call it space phones because it's hysterical. And they're supposed to, they were supposed to do millions, and once again, and I think they did $700,000 or $900,000. So call it what it is. Let's not delude ourselves that this company is going to change the world and be a threat to Apple or to Verizon, but it is what it is. And I know the people in the room feel that it's going to be, but let's just call it what it is. So once you started flipping this level, which is a major level, right? You just watch how you acted at that level, and you'll see it right here. So you have a major level. Let's go back to that so you can watch how I did this. So there's your level right there. And then you take that weekly level and you zoom in on the chart that you're trading. Now, here's the doji. And here's the battle. And that's why I was concerned at this level, right? And you'll see where in that video where I was like, okay, what are we doing, big guy? Then we're pushing. There's your retest. Once you up, retest, flips, it's on like Donkey Kong. And then from there, all you're doing is using this level as your stop. That is a weekly stop now that has been tested and is support. Once you flip, it's on. From there, what we were doing was just watching the opportunity. Now, from this point, let me drop this to a 5, and I'll show you this and get rid of these lines because I don't really need the lines, but I do want to show you something here. See the volume right here? See how this volume is above all this other volume in here and how it just spiked up? Let me show you this, and let's get rid of these lines because I really don't need them. But this is a really good lesson in volume and why certain areas of volume are worth your time versus others. That's just a 12. But see this bar right here? You see how that volume is above all of this? You usually don't see that, do you? Meaning as the day progresses, you have volume and then the volume drops down. What did you see here? right? And this is actually what you would call a divergence. I'm going to leave these clouds in here because I just am. But what do you have right here? You see that right there? You have a divergence in your volume. See where that spiked right there on that bar? Okay, so that's telling you that the volume is picking up and it's greater. That divergence is very different than what the stock is doing, isn't it? Right? You can see the stock's actually breaking out there. One could even show that you have a trend here where the stock's going higher, volume's breaking out. So if you have a volume breakout, which is really an actual pattern that you could use, and you have blue skies, it's a blue skies trade. What does that mean? It means that you have blue skies, meaning there is nothing above you to stop you. There is no resistance, hence blue skies trade. Let's go back to this. So once you break out here on that volume, it's on. Would I prefer you got over my line? I prefer a lot of things, but I have to take what I got, and this is what I have. Once that happens, I look at the risk, and then you just start realizing there's nothing above you, and volume is increasing. You can always use the line as a trajectory too, can't you? And it will tell you a lot too, and then you can even see it here as the volume picks up, and then it starts coming down, but do that at a different time. But you see what you're doing right here? Okay. So then all I start doing is I start pricing up the options, and I found the ones that I thought were cheap. I'm not going to get into how I determine if an option's cheap or not tonight, but I was a registered options principal for 9 years, but I can do it in another video, I guess. But this option made 0 cents to me, like 0. We bought these 30s for 55 cents. Now, what was great about these was I was able to take the ones from 22, still had stock, right? We could still whack around the stock, but the ones from 22, I had $3. I made $3 on. So I could literally take the entire gross or net proceeds of that trade and just roll them up into this. If it works, worst case scenario was break even on the day on the whole thing, but obviously it worked. And then what you're doing is you're just pulling money out. You realize that the train's going to end, right? So what you're doing is you're looking for signs of it going to end the entire time. Once we put that on, you can see the date and the timestamp here. So, and I think this is really important for people to get. So, and then as it goes up, what you're doing is you're just trimming it out. And what I'll do is I'll drop that up there so that you can see this. Well, once we got up 100%, usually when I'm up 100% in an option, I'll pull something out, which is what I did. And then what I'm doing is I'm just looking for other levels to pull things out. And again, I'll just show you the timestamp so that you can follow along. But what I'm doing with that is I'm just looking for certain areas. So then right around this 12, 11, if you start looking at how you're starting to act right in here, let me just show you, pops up, over, gets a couple dojis. I'm like, all right, we're up 200%. Let's pull something off. And then you start getting to that 1 o'clock. What did you do? Popped over. So I like to do this. Every time I'm popping over and the gamma spikes, I sell into the gamma. So for you guys that are option traders, you should know this, right? The speed limit, like let's say you're doing 55 and you're going 75 on the speed limit, right? And that acceleration is 20. Okay, that's gamma. Think of gamma that way. That's why the option could be priced more here than it could here in some cases, right? Because of the speed in which you got here versus the speed in which you got here, right? That's why you're like, why aren't my options priced the same as they were a half hour ago? That's why, gamma. It could be theta too, but usually it's gamma. Anyway, so then what you're doing is you're selling into these moves, and you can see that there. And then we started to kind of matumbo down, and I'm like, not today, Satan. So I'm going to pull money out of them, right? And then I raise the stop to where it is, and then 3 o'clock hits, and I'm just looking at this going, okay, this is ridiculous. Once we pop over like into here, you're just watching, and then you're just seeing it drop off. I'm not going to play games. I don't need this. I'm just watching this, and at that level, I have to make a decision. Do I want to hold this overnight or not? And the question for me was, I went to hold like a little bit overnight just for the heck of it, but I just blew out the rest at 800% and I called it a day. So there were 3 separate trades on this, right? So just because you get out, and this is really important part of this, just because you get out of a trade does not mean you can't get back in. You need another setup. So what you're doing is not selling here and going, I can't believe I sold there, it's here, I'm gonna buy it back, it's gonna go. That's not a setup, that's FOMO. Right? That's why 96% of day traders lose money. What you're doing is saying, I sold in here, I got out, I need to look for another setup. Very different. The questions that you ask yourself, right, are why you're going to get different answers. You might want to listen to that again. All right, so this is what we have. Now let's go through what you should be focused on for tomorrow, what I think is important for tomorrow, and we'll go to earnings on the week. And what we'll do is we'll go here to this Thursday and take a look at some of these. And we'll start with AMAT, which I think that's pretty important, but I really think HRB was really, really good. So we're down after hours. And the reason you're down is not so much the earnings, but the margins were really off. So it didn't get better on the call. And I want to point this out because everyone's going to come in tomorrow on semis and go, what happened? This is what happened. And then, of course, you always mark off that 5-minute bar and you can see where it broke. I did this after hours, and I'm always said, like, show me your losers. Believe me, I take losers. So when this popped up over, I thought that this was a good quarter. I thought it was actually going to lift in here. It, in fact, did not lift. The moment it popped like this, I bought. When then they just pulled the flim-flam on me, didn't they? It was just mean, but they did it. So they popped me over. I get all giddy. The moment I undercut there, I just blew it out, took the loss, and moved on with my life. And thankfully I did, and you always want to be fast, first and fast. Strike hard, strike fast, right? Out, in. I'm not sitting around hoping and praying. And now you can't get back over. And the call didn't go very well. It was just pretty conservative call. I actually like it. Now, sometimes this thing breaks down and then rocks and rolls at the end of the day. I actually think that if it pulls semi-downs tomorrow, you might find spots to buy it. But you have option X tomorrow too, right? So you have a lot of expiration tomorrow to look at. You are seeing pockets of strength out there, by the way, guys. This was a really good quarter, and they're doing a huge buyback. This is just chugging along, and I think it's really important to just note, like, there's stuff out here that's just, you're not even thinking about it, and it's absolutely crushing. So I would watch this tomorrow. But they did a huge buyback, and if you take a look at this, you have blue skies. Blue skies out there. Go back. Look how far back you go. And it's been around forever, H&R Block. And, you got blue skies out there. Blue sky trades are not the worst idea in the world, especially on option X when they're not tied to the index. That's it.